Hello everyone, it is Evan from the Trade Risk here on Wednesday, December 9th with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, leading and lagging sectors, and then get into some individual names. No trade ideas in this video. We're going to focus on the markets. There's been a lot of action happening, and I want to spend some time on that. And before we get into tonight's video, I want to remind everyone that this month I am going to be raising prices on the membership here. So for all of you who have checked it out in the past, you've been thinking about it, or for just new traders out there or traders with experience, if you want to learn a swing trading approach, very consistent trading breakouts across multiple time frames, come check it out, thetraderisk.com/premium. Lots of different resources. I'm going to give you basically all of the trades that I take, the why behind them, and most of all, you get access to me if you have questions about markets, something else you're doing. I'm certainly here to help you, so come check it out, thetraderisk.com/premium. Towards the end of the month, I'm going to be raising the prices into the new year, so certainly lock in those rates if this is something that interests you. Now, getting into the charts for today, it was a tough day for the bulls. We closed down 78 basis points here in the SPY, and this was our third lower day here for this week. And it's been a challenging week, and let's take a look at what's been going on here. You know, last Friday we ended the week on this strong sort of reversal igniting bar to the upside. This was a 2% up day in the SPY, and this reversed Thursday's big sell-off here and part of Wednesday's. We closed up here into this band of resistance or interest where we closed on this holiday week with all these topping tails, and 209.50 to 210 seems to be an important band that this market needs to resolve higher from in order to get a lot more constructive. Now, Friday, we looked at this market going into this week, and we're looking for the two outcomes. One was the bullish scenario where, with a strong close like this right into resistance, we could come up gapping up or gapping above this area and just go off to the races here into the year end. Or we might need to digest a little bit through time, just this big move that we had, and then, maybe we base out, move higher, or we do fail and come down and test these lows. Now, certainly it was the latter. We started off the week here on Monday with a gap lower and a slight gap lower, not much, but really the action didn't hold up. That was when we had our first kind of weak soft day, and it was an inside day, all things considered, and we did get that rally off of the lows. So Monday still gave you some hope here. If you're a bull, you closed above the fast moving averages, you had almost $1 rally off of the lows. I think that was constructive. Now, yesterday, right here on this day, we gapped down again, and once again, we did have sort of a volatile session where we did try and probe up. We didn't close on the lows. We closed above the open. There was some sort of life there, so it kind of kept you in there, but of course, you're starting to sink below these moving averages. So I think yesterday, certainly more of a neutral stance if you're looking at this market in the short term. And then today with another gap lower and a very volatile session. I mean, at the morning note that I send out to subscribers, to members, things looked good. When I sent that note out at 10:30 Eastern time, we were up here at 208, and the tone of that note was, as long as we can stay above 208, this is constructive. If we can get back above 209, that's when we're going to start adding some more long exposure. Now, right after I sent that note out, it was just a landslide lower. We traded from 209 down to 205 in an hour, or whatever the case was, and again, a very weak day. So now what you have here is you've got a series of of gaps that we opened lower on the day, volatile sessions, and it's tough because the bulls have been showing some signs of life. We're never closing on the lows. Like, look, if you look back in November 11th, look at this dead close on the low, the 12th, the the same thing. The 13th, those are easier days to navigate, even if you're bullish, because you know that there's complete weakness there, especially if you're a swing trader. When you have these days where you're starting to get a little bit of life off these lows, and you're in an interesting spot kind of in the middle of these moving averages, it makes it tougher. It makes it more of a whipsaw sort of action, and it's just tougher to navigate in general. So I think where we are now, we're firmly sort of have lost momentum here on the upside for sure. We're above the fast moving averages. Notice how the 8 period is starting to curl underneath the 21 or the 20 period EMA here. So that is short-term bearish. We are below the bulk of supply here. Really, we need to get back above 208 to get more neutral. I still feel that way. And then the big level is going to be 209.50 to 210. This area right here, where it looks like it looks like so far we're double topping around this area. It's too early to say that, but getting back above there is ultimately what the bulls really need. So I think if you really want to be long this market, if you're very active and tactical, you certainly just want to see this level taken out. Otherwise, there's just not a whole lot of interest here. So that's the way I'm looking at this. We've certainly reduced exposure. We had, back here on this day here, we had some of the our largest long exposure on of the year, and basically we've just been getting chopped out of everything, and we're now down to a few of our longer term positions that we remain in, but all of the short term exposure is pretty much off. It's been a difficult month, but that's the way we do it. The key is to keep those losses small and continue to move on. So that's the way we're approaching it. We still have some long exposure on, but it's more of our long-term holds and not too much on the active side of things right here. I think the bulls need to step up and prove themselves. Otherwise, it's too tough to fight this market. I think you need to get that all clear signal. And I think today, wrapping this up here, was certainly a day to take notice with how much we traded off of these highs. I mean, it was a very volatile session, and to be up at 208 and then lose, 4 points on the day effectively intraday, that's certainly something to take notice of. And I think that you should adjust or at least be aware of that moving forward. Now, if we look at some other markets, IWM, again, nothing constructive here anymore. This had some glimmers of hope in November as we started to break out of this range, but now we're clearly back below 116. We're back below this, so it's a neutral chop at best, depending on your time frame. But in the short term, there's nothing really to like here. It's below all the fast-moving averages. It's really sort of tough to like the Russell right here. The Qs, it's still a tough day for them. They underperformed, it looked like, underperformed all of the major averages today. And, the resistance is pretty clear, 115. It's not far away from it. One big engulfing or one big igniting bar to the upside, similar to Friday, can certainly change the tone. And it can change the tone in a lot of these markets. I know I sound pretty pessimistic, but, I think you just need to... I think it's tough not to be pessimistic just looking at the recent action. And again, one day certainly could change it. I mean, if we start to break through some of these recent highs, then, things have changed. So Q's clear range here, just keep that level on watch right now. Certainly neutral as it's starting to break below its fast-moving averages. Now let's look at some other markets. We spent a lot of time here on the indices. TLT, this one... it's just the bonds still don't want to die. I know there's a lot of talk about the rate hike coming up in just a couple weeks, I guess, or next week, I think. So far, we haven't seen too much of a move here in TLT. So, we'll have to see how this plays out. It's just middle of the range, could go either way. It's been, hasn't been interesting to me for some time. And until we see, back below 118 or above 124, it's going to continue to not be so interesting. USO, this is certainly what's been pressuring markets recently, especially this week. We're at new multi-year lows again, and we had a bit of a, again, this was I think this might have been the cause. I wasn't watching the intraday action too much today, especially particularly for USO, but I believe this was creeping up early in the day, and when this started to trade off, everything kind of followed suit. So again, bearish trend here, fast moving averages racing lower. You get a breakaway gap to the downside here. Certainly nothing interesting. Tough to bottom pick this. There's no reason to at this point, so you got to be careful. UNG, similar situation. Nothing's changed here. The same downtrend that we've been talking about for the past 3 months. Metals, gold. This one's trying to stage a little bit of a bounce. Again, I think we said that above 104 starts to get a lot more interesting, at least that this could potentially be a false breakdown here, and we could reject back up into that range. So we'll have to see if that happens. Right now it's just a little back and forth here. It's trapped in these fast moving averages, so it needs more time. It was still a painful chart to look at, but we'll have to see if it can repair itself. Silver, very similar situation. Now if we think about the sectors, XLK starting to unravel a little bit, just looking vulnerable here, looking a little toppy. You got these fast moving averages starting to curl over. Hasn't done too much wrong just yet, but you want to be careful. These lows down here around 43.30, 43.40, if you start to lose those, you got to watch out in that one. XLI, this one's starting to roll over a little bit too. This one, the industrials, I should say, have been holding up pretty well. We've been looking at them as leaders since October really, and they're starting to top out, push and roll over a bit. Fast moving averages curling over. Be careful there. The financials, same thing. We liked all of these sectors just a few weeks ago, and now all of a sudden they're not looking so hot. You can see starting to roll over a bit here. And then of course energy had a little bit of a bounce today, but still this one's been beaten up recently. The leading sectors, or the sectors that are staying resilient, is the staples. XLP continues to hold up pretty well. It traded down today, of course, but all things considered, it's holding up pretty well. And then finally, the materials have recently caught a bid, and they were trying to actually break out today. They closed up impressively 3% on the day, so a big gap up, something to take notice here. But these are the two certainly sectors of strength. I think there's a lot of names in there. If you're doing your scans, you want to focus on those. Now, if we get into individual names, we'll go through the list pretty quick. Apple continues to be just very uninspiring, going sideways. I think that's fine. It's setting up for a directional move here very soon. Yet to see what direction that is, but right now it's setting up. Google starting to crack a little bit here. It's had a very impressive run. You can see the buyers did step in and buy this dip, so they did push us higher off of that 753 low from today. The fast moving averages close right on the 20 period. See how this acts. I'd love to see this just go sideways, develop a base here, and then re-emerge and set back up for us on the long side. Amazon, similar situation, a little more constructive this chart. Same thing, it's going sideways. I like this action. You can see I already got the resistance nice clearly drawn there. I'd be looking for a breakout above that. If we can move sideways a few more days, I think that would be constructive. And then if it could manage to break out, I would like that. Facebook, similar situation. These are our big three leaders now, and clear defined resistance. They've been in strong uptrends, all of them, and they're moving sideways here. Haven't really broken down, certainly all week today, down 1.7% on Facebook, so it's underperforming, or in line with the Qs, I suppose. But, that's sort of the story there. If we look at Alibaba, this one's still holding really sort of resilient here. It's going sideways at this recent high. I think that's constructive. Above $85 probably gets going again. GoPro down 4%. It's probably a pretty good day for GoPro, all things considered. $16, continues to get beaten up, and no change in trend there. Twitter had a really nice looking day yesterday. Maybe it, you looked at that, could maybe put a stance in that the bulls stepped in and bought this dip, especially after cracking $25, which should have unleashed some potential momentum to the downside. But the buyers stepped in yesterday. They gave half of it back today. You certainly don't want to see too much else given back, or otherwise I think you're just going to continue to trend lower here. $25, $25.50 or so is going to be an important area to get back above for the bulls. And then finally, Tesla has been sliding here, not too dramatic. It's just been comfortably back below 230 now. Some signs of life here from the dip buyers on this session, but yeah, doesn't look too interesting. There's better setups out there, in my opinion, than Tesla. So that's all I have for today. No setups today. Hopefully you guys enjoyed the video. Again, if you have any questions about the membership that I have here, please do send me an email using the contact form on the trade risk. And as always, thanks for watching. I will catch you next time.